Hey guys, Akil Stokes here, Forex trader, trading coach, and one of the co-founders over at tier1trading.com, and welcome back to another one of my weekend videos. Now, before you say it, yes, something is different. Can you tell? Yep, I am growing the hair out, right? You can see the beard is getting thick as we approach this fall season. It's something that I do every fall, and I kind of enjoy it. It makes me feel kind of manly a little bit. But enough about that. If you guys are brand new, the purpose of this YouTube channel is to really push you towards becoming a better trader. And we do that in a handful of different ways. If you go across the channel and the almost 1,000 videos that are up there now, you're going to see podcast episodes where we're talking a lot about the daily interactions we're having with traders who are trying to go from struggling to consistently profitable. We're going to talk a lot about trading psychology. You're going to find videos that are more diary types, giving you a day-by-day look at what I'm doing on a daily basis in the market and how I'm feeling. You're going to see videos on technical analysis. You're going to see training videos teaching you how to trade. You're going to get a handful of different types of content on this channel, but there's going to be one main factor, and that is the idea that there's no one thing that makes you a great trader. It's not the technicals. It's not just psychology. It is a combination of both. It's treating your trading like a business. And my goal is that with whatever type of content I decide to deliver, we're hitting and really pushing you in that direction. And I know some people don't like that. Some people just want the trading signals. You just want the weekend videos where I'm showing you what's on my radar. I know some people just want the magic system or whatever like that. Fortunately, we do a good job at kind of clearing out the successful minded traders from those looking for a get rich quick fix, and we've been able to grow a terrific tribe here on this channel. So I appreciate you guys for listening. I appreciate you guys watching. And of course, if you want to support what I'm doing here, just hit that like button below. Now, in today's video, what we're going to do is we're going to show you a little bit of a trader assessment, right? I run a live trading room. Jason Greystone does as well on the platform 3 times a week. And as I just mentioned, we're not just looking at signals. We're not just showing you what to trade. We look at it as a daily experience, a daily training of really working on the skill of trading. Everything from the process of analysis to the specifics of strategy to recordings like what I'm about to show you, where we're talking to traders about really how to develop a rules-based system and really put what they thought they were doing correctly into a way that is more business oriented and something that can withstand the test of time, I guess you could say, something that is testable, verifiable, and repeatable. So enough of me rambling. Let's hop into it. I think this is going to be very powerful, especially if you're someone that has an idea about how you want to trade, but you haven't really dialed it down yet. So make sure you pay attention. As always, if you have any questions or comments, leave it in the section below. And while you're there, if you're new, hit that subscribe button. Make sure that bell is clicked as well. That way you don't miss my next video. All right? I'll see you guys at the end. All right, Dan, give me the live trade, demo trade, just experimenting with things. This is a demo. I had a short-term resistance. Okay. Now, let me ask you this. So is this are you at the point right now, do you have trading rules or just kind of just experimenting with stuff in the market? So do you have a full rules-based trading plan or just kind of experimenting with things in the market? Don't worry about typos. I can't write correctly either, so I tend to read typos really, really good. No, okay, so no rules. Okay, perfect. So, because if you had rules, what I was going to do is if you had rules, then we can break down and you can walk me through the situation rule by rule and we can see if the rules make sense and if you're following them. So if you don't have rules, then obviously there's no point in doing that, which makes the assessment part simpler. So Dan's looking at the hourly here on dollar Canada. Basically, it's a structure-based trade, right? Price coming up in the previous structure. We probed it. We did not break it. You've got some nice little double top action up there. And then you have a break and close below. So do you know what your entry would have been? Would it have been this lower low, lower close right here, Dan? This I'll get an arrow pointing there for you. This red candle, that's the lower low, lower close, or would it have been something before that? Hey, take off, or not take off. Take care, Roberto. Welcome, Salah. Yeah, we're about to end things, but you came at a good point. You can always watch the recording as well, but we're gonna we're going to break down some analysis from a trader, which is always fun. Entry around 132.20. Okay, but why? So why 132.20? What would have been the reason for entry? What was the signal? What happened on your chart that told you to push the sell button? And this would be a good example for you guys, especially you guys that are new, of rules-based trading. How everything we do, it needs to be rules-based, right? We use it if-then syntax, if this, then that, right? We need a reason for everything that we're doing. So what would have been the reason for entry? What needed to happen, or what did happen on the chart that told you to push that sell button? Or was it kind of just like, I felt like it was a good level? Because the candle prior had closed below resistance, then I wanted to, well, see, here's the thing, the candle, now we never got a lower low, lower close. Because the candle prior had closed below resistance, and I waited for the bigger red candle to push past. So what we need to do is we need to make this rules based, right? So that's the next part of the plan. So we need to take the ideas, because right now it's not rules based, and we need to take what you want to do, and we need to make it rules based. Now I would say this, and it's going to depend on how you view things, but so we're looking at this level, right? We never have, come on, replay mode. We never have a lower low, lower close here, right? So if you're looking for a lower low, lower close, which is a decent entry technique, we never have that. You can look at this as being kind of the area consolidation. You can look at this green line as being the current low watermark, right? Would you guys agree? Kind of the current low watermark of this move right here. So one way to enter would say, hey, we need to have a lower low, lower close, right? However, as price pushes on, right, do we get a lower low, lower close here with this green candle? We do not, right? So, however, that candle has pushed down. So what we have to do is, this becomes our new extreme. This becomes our new low watermark. So now we would need a lower low, lower close below this level. So although this red candle technically creates a lower low, lower close above that first level that we looked at, or below that first level that we looked at, there's no relevance to it because it's still trading within the range of the previous candle. Does that make sense, guys? So this red candle isn't a lower low, lower close. It doesn't really provide us with any information that says price is likely to continue short versus long, right? So we go into our next candle, same thing. We kind of trade within that zone right here. We don't really do much. And then I think on the next one, nope, we're still trading within. Next one. Okay, well, I clicked too much. But the one after that, this red one, this is where we get our lower low, lower close. So there are two options in this, right? If you are requiring a lower low, lower close confirmation, you would enter at market after this red bar printed, which would be right here at this green line. If you're more aggressive, let's say you're like a breakout trader, then what you're doing is you're identifying that low watermark, which is right here at the time, and you probably would have got filled earlier, but you're putting something like a sell stop right underneath that level. And that would have got you filled as that candle is being created. Now, with that being said, if that was your technique, you would have done the same thing up here, which means you would have been filled kind of right here as the market probed below and came back up. So a lower low, lower close entry, a confirmation of a break of that level would have been right here at 132.01. And that's what we talk about when we talk about a rules-based reason for trading, right? If price gives me a lower low, lower close candle, then I enter next bar market. So now the next question after that is, where do stops go? So do you have, I know you don't have rules yet, and that's why I wanted to ask it earlier. Do you have an idea on what type of techniques you want to use for stop placement at all? Well, it wasn't that you were aggressive, you just did the wrong thing. So I wouldn't even call it an aggressive approach. You just did the wrong thing. So I don't mean that in like a a very, I guess maybe, I don't know if it's negative. I hope it doesn't sound negative. How do I want to put this? It's not negative. It was just uninformed, if that makes sense. Like it wasn't like you purposely did the wrong thing. It wasn't like, well, I just entered because I felt like it. You had a reason for entry, but just the rules were a little bit off. I hope that makes sense. It wasn't negative. A negative would have been like, well, Keel, I just felt good, so I took it short. Like that's like, dude, what are you doing? This you had rules, just the rules were a little bit off for this scenario. So it's not a negative. It's a learning experience. So the next question is, so stop loss. What do we now? We need stops because we have entries, but before we have entries, we need stops and targets as well. So do you have an idea on what you want to use as stop loss? Any type of theory? I know you don't have rules yet. Do you want to use ATR base? Is it going to be above conservative, above the double top? Is it going to be just above the entry candle? Any idea? Above the previous highs. All right. So now the question is, so where above the previous highs? So is there any type of method? ATR based? Is it a set pip based, 10 pips, anything like that? So 5 pips above the double top highs. Okay, so we look at our highs right here, 132.60s, and our stop loss is going to be 5 pips above that, 132.65. Now, I've got to ask you this question. Why 5 pips? I think we all know the answer. And I used to do the same thing. 5 pips, 10, yeah, because it's a psychological number, and 5 just sounds good, right? Honestly speaking, like 5, I used to do 10 pips. Why? Because 10 pips sounds like enough, right? Any of you guys been in the same boat? It's funny how we always pick like 5 or 10 or like 20, right? Because those are comfortable numbers for us. So whenever we say like, oh, 5 pips above, well, why 5 pips? I don't know. 5 seems like a good number. Why 10 pips? And 10 sounds like a good number. It sounds safe, right? 10, double digits. So I like using a more dynamic method. I like using an ATR base. One reason I like doing that because it's dynamic to what's happening on the chart. So if you're going to have a general rule that says 5 pips or 10 pips, what's important to understand is that is a 5 pip stop on a 1 hour chart going to be the same as a 5 pip stop on a daily chart? What would you guys say? No. Well, why? Why are they different? It's still a 5 pip stop, right? What the difference is it's a different time duration. I think we can all agree that 5 pip range on the daily is much different than 5 pips on the hourly. We can do the same thing for this, right? And this is a perfect example. Is 5 pips on the dollar Canada the same thing as 5 pips on the pound yen? No, right? Because the ATR right now in the dollar Canada is 17. If we were just to go to the pound yen real quick, right? Our ATR is 45, right? Good old beastly, 3 times the amount, right? So you can see how a 5 pip stop is going to be different depending on not only the time duration of what you're trading, but the pair as well. Dan says, I haven't factored. That's what we're doing, Dan. New York Live Trading Room, dropping knowledge bombs for you. Right? So I like something more dynamic like the ATR, for example, average true range, and you can make it a multiple or a percentage of the average true range. So like you can do like a 1 ATR. So 1 ATR would be whatever your average true range is, you get 1 of that above the high. So in this case, it would be 17. So you look at 132, 132.60s. A 1 ATR stop would be 132.70, 76s. You can do 2 ATRs, you can do a half ATR, whatever you want to choose. But the ATR is going to be a more dynamic way of doing it because it's going to adjust depending on what time frame you're looking at, what pair you're looking at. So it's something that's more consistent and in my opinion, more reliable than just saying like a 5 or a 10 pip stop. So that's one right there. So we got stops. We talked a little bit about stops. Again, just an example of different rules you can use, Dan. And this is going to be part of your journey as a trader to try to figure it out. But again, our job here is as you go through those courses, right? You're getting experience with so many different things, and then you're going to kind of pick and choose. Hey, I like this. I don't really like that, or maybe I didn't like this before, but now it makes sense. I'm going to come back and use it. It's like a buffet. It's a buffet with a very specific order of eating things in the right way to increase your probability of being a consistently profitable trader. But it's still a buffet. You can pick and choose what you want to use. And then there's a master chef there saying, oh, well, here's a recipe on how to put it together and make it awesome, right? That's the cool part about it. You're not just taking random ingredients. You got someone there telling you, okay, well, when you take this ingredient, right, you want to pair it with that, and boom, now you got something, right? So targets. Now the next question is targets. So, and this was kind of the first thing you mentioned. Where were your targets at again? Can you remind me? I'm far too lazy to scroll up and look. And the question is, why did he not wait for the dollar Canada retrace? Because that's just not the trading style. He wanted to trade a break. So it's all different. Nothing wrong with waiting for a pullback, right? It's every trader is different. So you may be a pullback trader where you're waiting for a pullback and a 26.18 opportunity to trade it down. You may be a more aggressive trader where you're looking for a lower low, lower close. You know, one's not wrong, one's not right. It's just different. So where were targets again? Dan said 131.60s. 131.60s. Let's look at targets now. $131.60s. What do you guys think about this level for targets? I like it, Dan. I like it. That's exactly where I would put targets. Right at these highs, I like it. Funny story, I actually have my targets there as well, which is probably another reason I like it as well, right? I'm involved in the Gartley, we take a Fibonacci retracement back. Look what's right there as well. So I'm a little bit biased by that by that level, but yeah, I like that level as well, right at the B leg. However, there's a problem here, right? And this is why we always want to do entry, stops, and targets before we trade. What's the problem? Do we have a problem here? Risk reward, yeah. So with that lower entry, because of the rule adjustment on the lower low, lower close, we now put ourselves in a position where our risk outweighs our reward, which is cool if you want it that way, but you better have a high winning percentage if you're going to. So this trade would not make the cut. You have to be like, it doesn't work. Now, it's not over. You could always go back to a secondary opportunity. So let's say, okay, well, I couldn't get involved in my first opportunity. Is there a secondary opportunity? And a secondary opportunity may be a pullback trade, right? Lower low, lower close. Wait for the pullback. If you can catch an opportunity up here and shoot for that same move down there, right? Nothing changes with your risk. Nothing changes. Yeah. And again, we know you entered earlier, so it's a little bit different. I'm just kind of taking it through this example. We're going to ignore the earlier example because, again, that shouldn't have been the entry, in my opinion. But we'll take this scenario because I think this will help more in the future, right? Because we're going to have opportunities like this a lot where we have trading opportunities and we're like, oh, yeah, dang it. That lower low, lower close was so deep I couldn't get involved. Man. And then it's like, well, do we give up on it? Or do we look for a secondary opportunity? And 26.18 is a secondary opportunity. So again, let's say you get a pullback trade, you get an entry up here. Stops don't change. Targets don't change. What changes? And I went from negative to positive, and it's all good, right? Now, if that higher entry, does this look like a much more approachable setup? There we go. So, good stuff. I like that. Little trader assessment, not as harsh as I usually am, because if someone has rules and they're breaking them, I'm going to hammer them until they admit that they're breaking their rules. But you don't have rules, so it's easier. We can kind of walk you through the process. But I hope that was helpful, not just to you, Dan, but to other people as well. and it's a good example of, I think it's a decent trading opportunity. It stinks that it gave you that kind of long wick candle instead of that higher high, higher close, or that lower low, lower close to begin with, because that would have put you in a much better situation, depending on where it closed at. But we know that the market isn't going to give us what we want all the time. So as traders, we have to be willing to adjust. We have to have a plan B and a plan C, right? We have to have our grade A trade where it's like, man, ideally, this would be the best thing that can happen. And then when it doesn't happen, we need to think of opportunities. Okay, what's my secondary chance to get involved? What's my third chance to get involved? And then after that, then it's just, whatever. Erase drawing tools and start over. But that's a good example right there. Good stuff. Is there a cipher on the 5 minute? Let's see. Let us see. There is not. Nope. We have a lower low, lower close below the 1414. So unfortunately, an invalid C leg. So close, invalid C leg. Maybe on the 15. Maybe on the 15 if that's a wick. On the 15. So not the 5, but the 15. X to A to B, B to C, C to D. Yeah. Could be a possible entry if. Now here's the big if, right? This is going to depend on what time frames you're allowed to go to. Because if you're a swing trader, right? Swing trader, intraday trader, you're probably not going to the 15, right? You're probably going from your daily or 4 hour to your hourly. So to go to the 15 would be a reach because it's not a time frame you're supposed to look for. Again, this depends on how you line up your time frames. Now, if you're allowed to go to the 15, then yeah, you could look at this as a cipher. You could look at this as a cipher in its own right. You could look at this as specifically a cipher that you use as an entry into that bigger move. Or you can split it up. You can take maybe first targets at a normal cipher and then hold on to second targets for the bigger move. Yep. But that's right in that zone, right in that pullback zone. Yep. Hope you guys enjoyed that. And if you're interested in joining the live room, it is part of our trial membership. We have a 14-day trial membership here on the Tier 1 trading platform. It costs you $1. That's how we keep the trolls out. Trolls don't want to pay anything, but it allows you to get onto our platform for 14 days and try out what we have to offer. So that's everything from a few of our training courses to interacting with our community, which I think is the first thing you should do, to joining us in the live room, to downloading our software, right? If you're serious about becoming a better trader, it is worth the $1. Trust me. Take the 14 days, even if you don't plan on staying long term. Take the 14 days, sponge as much information from us as possible, and then use that information to progress in the rest of your trading career. All right. Hope you guys enjoyed. If you haven't hit that like button, please do so before you leave. Again, that's the biggest thing you can do to support this channel. Tier 1 members, I'll see you in the Q&A on Monday. The rest of you guys, I'll see you next week in the markets. Very excited about the signings that my Everton Toffees have made, but I'm not going to jinx it. Just hoping that we can get 3 points against Spurs this weekend as we kick off a new EPL season. All right. Until next time, plan your trade your plan. Take care.